So I would say the competition is starting to die down a little bit. Not a lot, but a little bit, but it depends definitely on the market. These single family homes, Roscoe Village, Lakeview, that I would say a month ago, one house would go on the market, you'd have 25 people, 17 offers. Now it's maybe, 25 people, but maybe 6 or 7 offers. I think a lot of these people have either decided to rent or maybe, move somewhere else. But the demand's still out there and there's definitely still people looking. I think people went into maybe shorter leases too, like month to month where they don't have, the urgency, but if they were to find something they like, they could definitely figure out their renting situation to be able to buy something still.
Right now we're in NEMA. This is the tallest residential rental building in Chicago. And kind of what we're seeing right now with the rising rates, a lot of people that are overreacting, they're choosing to rent and kind of wait it out to see what's going to happen. And they're renting in buildings like this. Right now we're seeing a lot of new construction that are rental buildings, like right across the street, for example, 1000 M. It was originally designed to be condos. Just because of the crazy market, they flipped to rentals. Despite everything happening in the last 2 years, we're still seeing a lot of people flock to the city, and there's a lot of new construction going up to address the shortage of inventory.
For a lot of agents, they've really benefited from this flight out to the outskirts, I call them, of the Lakeviews and Lincoln Parks, because if you've been selling single-family homes, and that's been more of your bread and butter, selling, $2 or $3, $4 million homes in a year was unheard of. The fact that you could do that in a week or a month right now, a lot of these agents are benefiting from them. Whereas the people who are selling more in the downtown, and if you have a lot of condo business, their business has been getting hurt. But what we're starting to see as the market starts to slowly shift is that agent sales on big high-end homes are going to start to kind of deplete a little bit. And as people kind of migrate back to high rises, you're going to see those agents kind of have more sales, and you're going to see business start to pick up.
So if you're going to look to buy, it's not like rates are going to get that much better. It's not like prices are really going to drop that much, if anything. So, I always tell people, if you got the means to buy today and you feel comfortable in the job that you have, you may as well make that decision now, because you don't know in the future whether things are going to go up or down. But the reality is that Chicago is such kind of a safer bet that even if it does go down, it won't go down that much and it won't last that long.
Areas that have benefited the most from rising home prices are places like these in Lincoln Park. Beautiful tree-lined streets where you get these huge homes because they're working from home more. They wanted more outdoor space, and they wanted to be in the city, but not in the heart of the city. Areas like these are where you have to watch to see if the home price growth will last. This type of home price growth is not sustainable, and the fact that you have a house back here that may go on the market for $4 million and sell before it even hits the market. That's never happened before. Typically these homes will stay on the market for 120, 150 days, maybe 200 plus days. They switch, they have 3 different agents throughout the process. But today, because people are mentally thinking hey, I want to be in the city, but not in the heart of the city, so I want more space, they're coming up here and spending probably more than what they should. So when we look at this home price growth, we have to think to ourselves, okay, maybe it'll last, maybe they'll come down a little bit, but the mentality is going to change as the world reopens. Another thing to kind of watch out for is just the overall economy. When interest rates were, below 3% and your portfolio was overperforming and you're making, 50+% in the stock market, spending $4 to $10 million on a home was a no-brainer. But now, as the stock market gets a little bit more affected and interest rates go up, people are going to be a little bit more hesitant on spending that type of money on housing.
So I think for a buyer, I think it's the best to obviously work with a good mortgage broker that can explain to you, how everything works and how your monthly payment is going to change. But, I honestly feel like most of our clients, they don't really care a ton. Historically, these rates over time are not that high. I've seen them up to 6%. When my dad was in the business, they were at 16%. So, I think that kind of speaking long-term, I don't think this is that crazy of a jump in rates.
When people talk about rates, they have to remember that the average is 7%. In the early 80s, when they're anywhere from 12 to 18%, people were still buying. And during the greatest real estate market of all time, which is 05 and 06, rates were around 6.5%. So the fact that they're at 5% doesn't really mean that people aren't going to buy real estate in America anymore. Sure, the areas that have had these high growths are going to start to slow down. Sure, areas in Lincoln Park where the home values kind of skyrocket really quick and there was a line of buyers, the demand might try to slow down a little bit, but we're not in some sort of bubble territory in a lot of the markets we work. We're not going to see these prices kind of go off a cliff and just start to nosedive. We're just going to see the market start to slowly but surely kind of shift a little bit, and things are going to get a little bit softer and things aren't going to sell as fast.
The rates are only going to keep going up. Rates are just getting back to normal. They never dropped below 3% before. Half the markets we work are down 20, maybe 30% in certain high rises. So the fact that you could buy now, you could buy the dip while prices are low and we're on a rebound and still take advantage of what I would consider a low rate. Because I will tell you, 12, 18, 24 months from now, you're gonna have rates that are 6.5%, and you're gonna have prices in the heart of the city be higher than they are today.
I mean, the average interest rate is 7%. Pre-pandemic, we've never seen rates, as low as we did. So, a 5% rate is actually pretty good.
So Chicago compared to other big cities, I think is still the best value. You look at, the other big markets, New York, San Francisco, Boston is nuts right now. So I think compared to other cities, I think we have our hot markets or mini markets throughout the city, but I think overall Chicago is going to be the best value compared to any other big cities still.
Take a look at this view. So we got Grant Park, Lake Michigan, and a skyline. The same exact thing, similar scenery in New York or California, it would be much more expensive.
Chicago is one of the most iconic cities in the country, and we were going down the right path when the pandemic hit, and it kind of put us in what I'll call like a rut. And all we need is that people to start believing in the city again, people going back to offices, companies forcing some of their employees to go back. I know it's not PC to say, but the more people who come back, the more restaurants are going to open up, the more museums are going to open up. We need more iconic institutions coming in here, do more of the stuff like the Riverwalk. Navy Pier kind of got like a nice little facelift. That brings in more tourism dollars, which makes people think the city is better. And of course, unfortunately, Chicago needs to kind of get its crime situation under control. The downtown markets have been plagued with crime. There's been a crime wave going on across all big cities in the country, so it's not just limited to Chicago, but they really got to get that down to make people feel more comfortable walking around again. But I feel like we're on this tipping point where Chicago could either go a direction where we become even bigger and better than a New York, right? Which I know won't happen, but wishful thinking, it could be in that category. Or, Chicago could go towards a Detroit moment. Now, I think that's more of a dramatic effect, but I do think that Chicago has so much to offer that we can always be seen as one of these most iconic cities. It just needs to continue to going down the right street, making the right decisions.
So for all the buyers and sellers out there, don't freak out. Find yourself a good mortgage broker, a good agent, and they will definitely help you through the process.
Yes, interest rates are going to go up. Yes, the economy is going to change. Sometimes it'll be good, sometimes it's going to be bad. But don't buy the fear. People are always going to want to live in big cities, and the market will be just fine.